My name is Mark Hochstein. I am a managing editor at CoinDesk, and we are talking about exchange infrastructure in this panel. I'm going to ask each of the panelists to briefly introduce yourselves and briefly just describe what you do, starting on my left with Kristen.
My name is Kristen Boggiano. I'm the Chief Legal Officer of AlphaPoint. AlphaPoint is a technology provider. We do initial issuance, and we have a white-labeled secondary trading platform. We are in 40 countries and have approximately 100 clients. And my background is in capital markets. I've spent the last 20-plus years creating a variety of different products, lobbying in DC, and worked on trading floors and at outside counsel and at asset managers. So that's my background.
Steve?
I am the co-founder and CEO of Voyager Digital, what we believe is the first publicly traded entity in Canada as an agency broker for crypto trading. We service retail customers through our mobile app and other businesses through our APIs. I've been in this business. It's good to be here with Kristen because we're both over 20 years. I've been in the capital markets for 25 years. Spent many years at E-Trade, helping build that up in the late 90s, early 2000s. I built my own broker-dealer called Lightspeed Financial before I entered into Voyager.
And last but not least, Yoni.
Hi, can you hear me? I'm Yoni Assia. I'm the CEO and founder of eToro, which is the world's largest social trading network. We have over 10 million users from 100 countries who trade stocks, commodities, indices, currencies, and cryptocurrencies. And we just recently also launched in the US our platform for starting with cryptocurrency trading across 15 different cryptocurrencies that also enable you to see, follow, and automatically copy top traders from all around the world.
So everyone on this panel has, as Steve mentioned, has had some experience in the traditional financial markets before going down the rabbit hole of crypto. And the way I want to start this conversation is if we can talk about, when you come into this space, having worked in a Wall Street context, having worked in an investment banking or a traditional equities market context, what strikes you as different? What strikes you as needing improvement? And what strikes you as, I wish we did it better, I wish we did it this way in the old world? Maybe starting with Kristen.
I mean, clearly, for me, the regulatory framework for crypto in the United States and internationally is extremely underdeveloped. I was talking with Congressman Ammon yesterday about the Financial Industry Task Force, and they really need to do something because there's just a logjam at the SEC, there's a logjam at FINRA, and we're not seeing the projects develop. So from an infrastructure perspective, from a legal perspective, certainly the traditional markets, while albeit they may not be perfect, they have market surveillance, investor protection, a lot of the necessities that are required for a functioning market.
Yeah, the differences between the markets, we can probably go on for hours alone from an infrastructure standpoint. When I first started the project and we built our technology literally in 10 months, we thought we'd be able to take an OMS and a books and records system that was equities and options driven and FX driven and turn it into a cryptocurrency. Boy, were we wrong. 6 weeks into it, we scrapped that whole idea and had to start from scratch. So I think there's a lot of new infrastructure that really takes place here, which is completely different from the old equities world that we all come from. But I think some of the bigger challenges are trying to figure out how to integrate all these coins into an overall offering. I know Yanni said they have 15, we got 20, but trying to bring that all in is significantly different than just adding another security and a CUSIP number that's been done in the equities world for so long.
When you add a new coin, what are the kind of things that you have to do that Wall Street doesn't have to think about when they just add a new stock?
First custody, second is decimal places, right?
Yeah.
In the equity world, everything goes to 2 decimal places. When we first started building, we had 8 decimal, 12 decimal, 16, 4. It didn't matter, and then you never had to think about that in the equity and option world. Now you have to think about that every time, along with custody and security on every single one.
I'll be the optimist here. I'll say that infrastructure in crypto is actually much better than traditional markets. Traditional markets basically financial services is completely broken. So we trade with numerous counterparts around the world. Nothing you need to reconcile at T+2, like the books, record keeping, and accounting is completely sort of separated from trading and execution.
For those who are wondering, T+2 means that the trade is settled 2 days after it takes place. So the money comes through only 2 days after the parties agree.
With a lot of counterparts in the traditional financial system, everything is done on a daily basis. Like people don't appreciate that enough on the crypto world, where everything is real time. You can move money from one place to another in real time. A lot of the things in the traditional world sort of reconcile on a daily basis. So we're moving from daily basis to semi-real time. That's a big, big difference. And you're moving from a world where trading and settlement is sort of two very separate things. You have trading, pricing, and settlement, three different things. And suddenly everything sort of is unified. And that's, I think, the whole basis of this revolution is digital native assets. You can move the assets from one liquidity provider to another liquidity, from one exchange to another. It's the same asset. Everybody supports the same assets. When we add a coin, when you add a coin, then we can easily, then once we add the support to that coin, we can easily become counterparties to one another. And that's why the markets are relatively efficient, why the prices in most exchanges are relative, despite the fact that there are so many exchanges, prices are quite similar because people can actually open an account with minutes in most exchanges and start trading extremely fast. So market makers and arbitrators are basically making those markets, in my opinion, much more efficient than traditional markets.
Are you sure about that? I mean, you have all these different exchanges. Like Steve, like how similar are the markets in your observation?
Well, I was going to hit on
across
that.
exchanges.
I think first and foremost, in the traditional equities world and options world, customers don't open accounts with exchanges. They open accounts with brokers who find them a best execution across the exchanges, and prices are protected by the NBBO. In this, I know Yanni says they're close, but we're connected to 12 different exchanges, multiple liquidity providers, and I think Alpha Point does something similar. Their prices are all over the place. That's what allows us to try to find best execution for customers, because we're on 12 exchanges, expanding that rapidly as we get approved. We're approved by like 30 different exchanges right now. Those price discrepancies cause customers to have to open multiple, and each exchange has different coins. So I think there's tremendous, it's not inefficiencies, but opportunities for brokers to play a game and to be in the business to support customers. Because our job as a broker is to find best X for customers. And in doing that, you need to be in multiple exchanges. You can't just send your order flow to one exchange or one liquidity provider, because you're not doing the right service for the customer.
Another thing that I think is really interesting is that this is a market that never sleeps. It's 24/7, it's 365 days a year. What particular challenges does that create when you're trying to sort of when you're building infrastructure for these markets?
It's been, for us, for Alpha Point, it's been difficult, because when do you do maintenance? When do you actually upgrade your software without disrupting a client that's potentially trading 24/7? And I think that's been the hardest is, or if you're trading, or when do they sleep? You have to actually get 3 different people to maintain some kind of active system. So that's, for us, been the largest challenge.
Yeah, I follow on. I think the infrastructure and having that up 24/7 and not going, you need to do maintenance. How do you do it? And you try to, spec out how to do that. But the second most important thing is service, right? I mean, now you have to have service round the clock, where the traditional markets, you had early, the market opens early, maybe 7:38, it ends at 8 at night. Now you have to service customers 24/7. Weekends, where you never had to think about that before. So service and technology and keeping it up and running 24/7 are 2 of the main ones. I'm sure there's more, but that's the 2.
Do you have humans working at all hours?
We tend to have people on support answering emails and questions 24/7.
We are 24/7.
Yeah, us as well, but I think, I remember, so we were 24/5 in 2017, and then when crypto started picking up, like from 2% of our revenues started growing to 10, 20, 30, we said, okay, we need to open over the weekends. We had this dialogue of, okay, what are the costs? We need trading room now 24/7. We need support desks 24/7. But I remember we estimated revenues coming from weekends for the rest of the year to be X, and then they were something like 50 times what we originally expected. So the thing is, because this market is so global, that people actually trade on very different hours. So I had this funny thing, I trade stocks as well, and I'm here the entire week, but I'm used to trading at like 6, 7, 8 in the evening. So I trade, and the order doesn't pass here. I think I was buying Uber after it dropped. Like, what's wrong? And I actually sent to our support, like, something doesn't work, because I just tried to open Uber and it doesn't work. Then I realized I'm from Israel. In Israel, I tend to trade in the evening, and that's morning hours here, so it actually trades. And basically, I'm just used of trading 24/7.
Compliance is another one, right? I mean, when you have to have your compliance and you try to automate as much as you can, but that's another aspect of 24/7, making sure you're reviewing accounts, make sure you're reviewing trades, all that as a 24/7 perspective. It just changes the way you operate drastically.
I would say too that it's really interesting that you were talking about what to take. Why do the markets only stay open for a certain period of time? I mean, maybe we'll see a change in the equity markets, and where we will have 24/7, across, now for everything else. It's so antiquated.
Wouldn't you want to have sold Uber the other day and bought Bitcoin and be able to do it and got your cash to do it immediately?
Although
exactly.
let me challenge that a little bit. So people like to say that crypto markets are liquid, but when a market is so fragmented, is it really that liquid? And particularly if there's not like a critical mass of people in a single venue in a particular block of time that are trading, can it really be said to be liquid if it's like spread out not only in different venues but like different time zones?
So I actually think it's a super liquid market for retail investors. So we need to understand that the crypto market is very retail driven versus traditional markets. So when traditional markets, you think about liquidity, you think about sort of depth of book. Can I do a $50 million trade? Can I do $100 million? That's very hard. By the way, it's very hard to fund $50 to $100 million to most crypto exchanges. And it's very hard to exit. You'll swipe the entire book. So now they're aggregators. So we're aggregating like 15 different exchanges into our exchange. So some of the bigger exchanges are aggregating books of a lot of exchanges, which supplies that depth. But for a retail investor who wants to do anything between a $1,000 trade to $1 million trade, this market is super liquid. That's true, and I think that's where the opportunity on BestX really comes in there, is because if you look across the top of books for all the different exchanges, someone's best price might be a fifth of a Bitcoin, someone's best price might be one. That's why the aggregation on looking at BestX really matters, because the depth is not there on each individual exchange, but aggregated it is. And that's Tiani's point. I think when you aggregate it, you see a much bigger depth than if you're trying to just execute on one exchange, because you might have to go down multiple orders, multiple price points if you want to execute 5 Bitcoin on one particular exchange. But if you do it through an aggregated book, you might be able to get closer to the top of the book.
Yeah, we have something called the Remarketer that does exactly what you're talking about. So it's.
Does this fragmentation issue, could this drive consolidation among the exchanges? Is there any potential for that?
Well, 20 years ago, if anyone remembers the ECN world, you had so many different ECNs in the US.
ECN, that stood for?
Electronic Communication Network. It was the precursor to ATSs.
Okay.
And ECNs, there was Brute, there was Strike, there was, I could keep going on, there's probably about 20 of them.
Yeah.
And each one had limited liquidity, and quickly they realized, okay, we're better off consolidating, and then consolidating our books, because there was no NBBO, no national best bidder offer back then either. So consolidation happened. I think we'll see it here. I don't know when, maybe it's probably a couple of more years out, but consolidation with some of the smaller exchanges first to help grow their depth of book is probably inevitable.
By the way, if anyone has questions, feel free to step up to the microphone. Panel would love to love to answer your questions, and here I believe we have one right away. Sir.
Yeah, hi. As things start going towards more and more securities, say equity securities that are tokenized, and how do you see that changing your business, given that, I don't know how many different currencies you trade now, presumably there'd be thousands of them, all with very different characteristics.
So at least for us at eToro X, tokenization is a big part of our strategy. So we just announced this week we've expanded our stable coins offering to 12 stable coins, basically covering gold, silver, euro, dollar, yen, etc. Our view is actually how the crypto world works, 24/7 digital native assets. That's how the market should actually eventually work. That's how stock markets, commodities, etc. Everything should work. So we're in the process of tokenizing the 2,000 assets that we trade on eToro and have them eventually trade on eToro X, our exchange. So you'll be able to convert your Bitcoin either to gold or eventually to Facebook stock or maybe to other STOs. So I think a lot of people are talking about STOs as an opportunity for primary capital, for raising money, the same as they did with ICO. We think there's a huge opportunity in tokenizing actually existing assets like fiat, like commodities, and creating that what we see as efficient markets across a lot of different exchanges, across multiple asset classes. So suddenly the market, the traditional markets will become 24/7 with digital native blockchain assets basically trading and transferable between different exchanges.
We own a broker-dealer because we see a lot more of the of STOs coming out over time. Again, I think it's a little bit longer time frame, and to the point, we do see, you know, the selling Bitcoin for an Uber STO or whatever, you know, with tokenized Uber or so forth. We see that as something definitely coming down the line, but it's a few years out. I think some of the custody issues have to be resolved, and regulatory-wise, you have to start thinking about what's a good custody location for these things and how it affects net capital. We talked about this in something yesterday. One thing that kind of gets lost when we start talking about good custody locations with the SEC is how net capital for those broker-dealers get affected by security tokens, because the rules today would say it's 100% haircut, which nobody wants to live by. So there's a lot more to be educated about this stuff.
Yeah, I mean, when you say the word security to a lawyer, I mean, that's just, there's a very unclear guidance from the SEC as to what that means. They just published, they turned it
Say tokenized assets.
Yeah.
And tokenized assets.
Smoother.
Right, right, but they just took a 4-prong test and turned it into a 65-prong test, providing little guidance, and I don't see that. I was talking to Commissioner Peirce yesterday, and despite every effort, I don't see any change in the regulatory regime in the United States quickly. And I think what I am seeing is a lot of clarity internationally. So I think those markets will mature and provide guidance to the United States. And so I'm going to be in your field here and say it's going to be a couple of years before we really start to see that market pick up in the United States.
Sir.
Yeah, for each of you that are doing order book aggregation, are you also doing custody? And how are you charging for that service, such as the BIPs on a transaction?
Everyone hear the question?
I didn't.
Do you do custody, and how much do you charge for it?
Yeah. Do you custody, and how do you do it? Yes.
Yeah, are all of you doing order book aggregation?
Yeah. So we aggregate. So traditionally, the eToro platform is a trading platform. So we aggregate. During the crypto boom, we had $200, $300 sort of $1 million going in and out from the basically crypto assets on eToro on a daily basis. So what we did is we aggregate multiple exchanges to basically facilitate that to our customers. We recently launched eToro X, which is our own exchange where we aggregate basically liquidity from multiple exchanges into one aggregate order book. So we've been custodying assets for our customers ever since we offered crypto. Everything is in our cold storage facilities, and it's free. So you're welcome to try it.
Yeah, we...
Wait. The custody is free.
by definition,
But-
our custody
but,
is free.
Because that's got to be an expensive activity to do. I mean, you know, custody in crypto, it's like, you know, you've got Faraday cages, you got like underground safes, you got, you know, probably, I'm guessing like former Mossad agents or something guarding this stuff. So like, I guess you just make it up on the trading volume? Is that the model?
I don't know why are people paying for custody when it's free on eToro.
Okay.
I don't know.
Well,
I would imagine it's a cost-intensive business. So so
It's infrastructure. It's mostly
It's
security and infrastructure. So at the peak, we held more than $2 billion in crypto assets for our customers. And we have we're 700 people. We have relatively large tech teams. So the infrastructure to set up the cold storage is sort of a fixed infrastructure, and then obviously ongoing security, et cetera. But we're doing that the same to our customers. There's no custody when you buy stocks on eToro or you buy gold on eToro. We don't charge custody either.
yeah, we don't charge either. There's no fee for custody.
and Voyager acquired a wallet.
So we actually go one, you know, another step there is that our custody we do with third parties, and we allocate the risk across multiple parties to make sure that it's extremely secure between cold and warm and so forth. But as you mentioned, Mark, we bought a wallet called Ethos, and therefore offer our customers the ability to actually self-custody, and soon to come out the ability to trade right out of that wallet through the Voyager application, so that you have the choice of either letting us custody for you or bring it onto your own self-custody and hold your own passcodes, because a lot of times we see no codes, no key, no coin. So we want to give customers all that optionality so they can choose the best way.
I think that's, by the way, a bullshit statement.
Well, it's
I understand the statement of not your keys, not your coins, but for most people, for the majority of people, I hold my own treasures, ledgers, and cold storage. I'm a technical guy. But for most people around the world, I don't see how they actually hold their own private keys. That's like
we should get the ledger guys up here, because I think they've made a very successful business out of all their cold storage and so forth as well. So I think there is always a segment of this market.
I think it's definitely a segment of the market, and I think it's an extremely important part of crypto. You're able to hold the keys. It enables a lot of companies to enter the space.
This is the biggest issue
Super
right now.
important part of the market infrastructure and the concept of the technology.
100%.
But I see my mom is in the crowd. I don't see her holding her private.
I didn't say it. I didn't say your mom would, but you do.
I do.
The
I'll
custody
hold her as
issue
well.
is where the theft comes in. It's where there's the biggest risk. And it's the one that regulators around the world are struggling with because of all of the issues, like what happened recently with $41 million just disappearing, or 41 million Bitcoin in dollar value disappearing in finance.
And that's why we give, that's why in the end, it's an option. For those people that want that extra layer of security and custody to do it themselves, you should have that option.
Yeah. And, in the traditional institutional player, they really need to, they're highly regulated. So a qualified custodian needs to hold the assets. And that's what happened after Madoff. We need to have a true accounting, and there's no ability right now to actually provide an accounting of what people are actually holding. Until we resolve this, we're not going to have the type of liquidity that we want in the markets and the adoption that we want. So custody is a really significant issue.
You made an interesting point, Yoni, about how there's different types of users in this market, and there are the people who want to custody their own coins, and then there are users that would just rather outsource it the way that we outsource anything else. I wonder, among the clients who are using these services, how many would you say, or what percentage are people who are trading this stuff or buying this stuff because they really believe in the tech and they really believe in sort of the promise of crypto, and how many of it are just sort of traders who are like, they see this as just like an asset, volatile asset that maybe they can make money on?
Yeah, we're in it for the technology.
I'm sorry?
We're in it for
You're
the
in it,
technology.
but your customers.
Our business is, a lot of our investors actually trade other assets as well. So they see an interesting asset class, more volatile than more traditional asset class. and we're seeing just traders sort of shift also from stocks to crypto and from crypto to stocks. And these are people who are usually in it for speculation. I think it's a very passionate asset class. It's different, like a lot of the thesis we had around stocks on our platform was to convince people, if you like Coca-Cola, if you like driving Uber, or if you like using Google products, buy that stock, right? But that's still not very sort of mass retail concept that people buy the stocks of the products they love. Where in crypto, a lot of the people trading crypto are very passionate around crypto. You won't find a lot of people in the space that can't give you a 1-hour lecture about Bitcoin and why it's going to solve a lot of the world's problems.
And what would you say would be the breakdown between those two groups?
Between sort of speculators for price versus
and
hodlers?
Yeah, the passionate fans. Just among
I
eToro's
think
clients.
it's actually much more passion-based and interest-based than in the regular markets.
Interesting.
Like the regular markets is returns period, and if a stock doesn't do well, dump it. In our world, it's like something doesn't do well, hodl.
Who in here, when they trade, are passionate about the Bitcoin when they're trading?
I don't really trade.
I think there you definitely get a good mix, and we see a mix of those that are so passionate they're going to hold it, but they will trade around it. They will trade and speculate some things off of other coins. They might be really passionate about Bitcoin, but they will speculate about IOTA or something, some other coin that they're like, let me see if I can make a few bucks while I'm sitting there. I'm going to be long Bitcoin, but let's see if I can make a few dollars trading, the technicals on some other coin. It's definitely part of what a lot of people do. They might still be passionate and hold some, but they're still going to trade around to try to make some alpha.
So if there's a Venn diagram, there might be just some overlap between these two groups that I've described. I think we have time for one more question. If anyone else wants to pipe in on something.
Can I follow up my question, just a quick one?
Sure.
Are you guys also insuring that custody?
Yes, we do.
Through our third parties, yep.
Care to elaborate?
I think it's becoming more common to get insurance, and insurers are becoming more comfortable with the process. But it's critical because of risk, and you want to protect your clients. To not have insurance would be foolish.
Yeah, we do it all through our third parties. Whoever the third party vendors are, we do the custody with.
And eToro?
We took a position that insuring cold storage doesn't make sense from a cost perspective, where we were talking to several insurers on the warm wallets, etc. Insurers took a while before they sort of understood the space. They also originally charged a lot of money on it that would incur eventually custody costs if you have that level of insurance. I think now we're seeing more and more large insurers going into the space, willing to also insure larger sums. Because some insurers are going like to 550. Now suddenly you're seeing insurers willing to do in the hundreds of millions.
So eToro does not.
For the cold storage, we don't use insurance.
So you do it for hot wallets?
For the hot, right now we're starting to use a service that does it. Yeah.
Okay. Great. So this has been a fascinating conversation, but we are just about out of time. So I would like to thank the panelists and also all of you for your great questions. That we could go on for an hour, but we got to wrap it up. So thank you.